I have seen every possible credit history, credit score scenario you could imagine coming out of my 30-year career as a mortgage banker. I have read thousands upon thousands of credit reports, and over that time developed an understanding about credit. I'm like the guy in the movie. What's the movie where he says, I have a very special set of skills. Oh, Liam Neeson. Well, I do also. I am an expert in credit, consumer credit, which often flies in the face of the expertise that you folks find here on YouTube or out there in the world. And I'm not even going to talk about the famous names who've made a big name for themselves discussing credit with books and radio shows and podcasts. My expertise comes out of seeing actual results. Because, Linda Ray, what's my favorite phrase?
Results are the only thing worth talking about.
Results are the only thing worth talking about. Having read, but not only just read the reports, but having sat with people face to face in the backs of real estate offices, at kitchen tables, in conference rooms of attorneys' offices, accountants' offices, my banks that I worked at, I've had the conversations to understand about people's credit and how they got where they are. So I just want to share with you right now a couple of basics that you should know about personal credit, which will help you, I believe, to get better results with your credit scores. And number two, to screen out all the crap from people who are trying to sell you junk, trying to sell you garbage that you don't need. Because the one thing I know about personal credit, derived out of my long experience, is this. If you approach how you manage your credit history with some basic common sense steps, because there's no real secret to it. It's not. It is so simple. I'm going to share that with you. But I do feel I should plug also, I just remembered, Linda, and this is not in the script, so bully yay for Trevor for doing stuff off script. We have a guide that I created called Rebuilding Credit After Bankruptcy. But some of the things I'm going to talk about right now are in that guidebook. And what do we sell that for? It's very inexpensive. $27. So if you give her a minute, I'm sure Linda Ray can put the link up. So if you want to purchase that, it's already there. $27. Here's the things you need to know about credit. Number one, there are no shortcuts to building a credit history. Okay, I've seen these commercials. Oh my God, improve your credit score in 30 days. No, you cannot do that. A real credit score impact takes time. It takes time. I'm talking about years, typically 2 to 2.5 years to build yourself to a reasonable credit history and a decent credit score. What's a reasonable credit history? 3 to 5 credit accounts that are open and active. Okay, so 3 to 5 credit accounts that are open and active. That means you could have a Visa card, you could have a store credit card, you could have a car loan, right? So that's 3. Maybe you have a mortgage, and maybe you have another type of credit card. So 3 to 5 accounts. And all you gotta do, it's so simple, is use those credit cards. Pay them on time. Make sure you are familiar with your state regulations. Every state has different consumer protection laws about credit and required grace periods. So in New York State, I actually don't even know what the rules are here in Connecticut, but in New York State, where I grew up, where I learned about credit in the mortgage business, they give you, for a mortgage, for instance, a 15-day grace period for your mortgage payment before you are considered delinquent. So a mortgage company cannot mark you delinquent to charge you a late fee on your mortgage in the state of New York unless you're 15 days or more delinquent. And so people confuse that. It's the same thing with a credit card. If you pay your credit card, if your credit card's due on the 5th of the month and you pay it on the 7th, well, your credit card company typically has terms that allows them to charge you a late fee because you didn't pay it on time on the 5th. And sadly, the current nightmare political administration we have in Washington, D.C. has eliminated an initiative started under President Biden where they capped and or eliminated altogether many of these garbage fees that these credit companies and these banks are charging you. But going back to the mechanics of it, so whatever the grace period is in your state, you should be aware of that. But in your credit card terms, in your mortgage note terms, in your car payment terms, they will tell you you must pay by such and such a date of the month, and after that date, they will charge you a late fee. Where a lot of consumers make mistakes is they think, okay, my payment was due on the 5th, but I paid it on the 7th. Oh my God, I'm delinquent. And I know this because when I've interviewed first-time buyers back in my mortgage career, before I ran their credit board, I would ask them questions about their credit. And people would say, oh yeah, well, I've been late 2 or 3 times. To which I would respond, when you say you're late, were you late a couple of days past the due date of the month? So if you were due on September 5th, you paid on the 10th? Or were you more than 30 days late? If you were due on September 5th, you didn't pay until October 5th. That's different because a 30-day delinquency gets reported to your credit report. So don't be afraid that if you are facing financial challenges or, you're human and you forget because you ain't a robot and you ain't ChatGPT and you pay your payment a few days past the due date and you pay the late fee, that is not reported to your credit report. This is what I told you earlier. This is the kind of common sense credit expertise that I have that you pretty much don't find. I have not found anybody out there who tells you this kind of thing. They tell you how to build up your credit score and how you need an 800 credit score and all that crap. It's all garbage where they're trying to sell you junk that you don't need. You don't need credit monitoring. That's another scam. The whole thing about credit monitoring, just so you know, that is the credit companies collecting data on you on top of the data they're already collecting. And y'all are falling for that scam, giving away your data for free with credit monitoring. Because every time you take out your device and you check your credit score, they know you're getting ready to do something. And they can sell that information to marketing companies. Yeah, that's what credit monitoring is. Credit monitoring is crap. You don't need it. Okay, back to delinquencies reporting on your credit report. 30 days late gets reported on a credit report. Funny thing about when you either pay a few days past the due date and pay the penalty, the late charge, and or you're 30 days late. Did you know that you can contact your creditor, whether it's your mortgage company, your credit card company, your car payment company, whatever it is, and you can say to them, I'm really sorry, I made a mistake, or I ran into a financial issue, Doge cut off my social security check, so I didn't get paid, whatever it is. Can I have a one-time forgiveness? You don't know unless you ask. And a one-time forgiveness, they can waive the late fee and remove the 30-day late payment, and they won't report it. It's 30 days late. So when I say that one of the building blocks of building a credit report is 3 to 5 accounts, open and active, that's the first precept. The second precept is pay your bills on time. Even if you've had the occasional blemish, the occasional hiccup, because life throws challenges at us, you can ask for one-time forgiveness. It does not hurt to make that call and ask. And if the person you get on the phone says no, ask for the supervisor. Make your case. Be human about it. One of the basic rules I had when I worked as a mortgage loan officer, which essentially I was a salesperson to sell money, I had a simple concept about going out into the world and finding either people who refer customers to me or finding customers. If people like you, they will find a way to do business with you. Well, it's the same thing when you call your credit card company, your mortgage company, your car, and say, hey, listen, this is what happened. I mean, don't get into elaborate storytelling. Don't over dramatize it, but certainly be real, be authentic, and ask for forgiveness. You'd be very surprised. They will waive the late fee. They will waive a 30-day late payment. I'm not talking about people who run into serious, difficult life challenges. I'm going to come back to that in a second. People who have serious life issues that cause them to have multiple late payments over extended periods of time. Going to come back to that. So concept number 1, 3 to 5 accounts open and active. Concept number 2, pay your bills on time. Concept number 3. And I promise you, I'm going to get folks for as long as this video's up on replay, commenting how how I am wrong about this, because I've had people tell me to my face in the backs of real estate offices, in conference rooms, on the phone, "You're wrong, Trevor, because so-and-so says, and that credit company says, and they say, and this expert says," except I've seen it with my own eyes. And here's the outrageous thing I'm going to say to you. 50% utilization. Do you see I'm freezing my face? Because all of you out there are told 30% utilization. The problem with 30% utilization is it completely flies in the face of reality. If you're alive and living and you're trying to make a life for yourself here in the United States, stuff happens, life happens, challenges happen, mistakes happen. But if you have 3 to 5 accounts open and active, and if you're paying your bills on time, you can go to 50% utilization. Let me tell you, high utilization only has a serious detrimental lowering of your credit score impact if you don't have enough accounts open, you're not paying your bills on time, or you are literally maxed on all of your accounts. And even then, I have seen the credit reports, I've seen the scores. When we run a credit report in the mortgage business, there's a scoring matrix at the end of the report where each bureau, TransUnion, Equifax, Experian, they literally tell us what their maximum score is. So if a maximum score is 805, and then it says how many points were taken off for the different categories. And I've seen people with 3 accounts with 50% utilization. I've seen people with 5 accounts that are maxed on all 5 accounts. And I've seen the difference, and it's not that dramatic. And if that's the kind of thing that you're monitoring with these crappy credit monitoring services, and if that's the kind of thing that's keeping you up at night, come on, man, there's worse things to be worried about in life. 3 to 5 accounts open and active. Active means you use it every month and you're making payments on it, by the way. Just as a side note, that whole nonsense of using your credit card and paying it in full every month, that's not using credit. That's an ATM machine that you carry around in your pocket. That's all that is. When we say use credit, it means you've got a credit limit of $1,000 and you use about over a 12-month period, you use $200, $300 a month. You carry the balance. Maybe you make minimum payments. Maybe you make a little more than minimum payments, but you carry a balance. That's what active means. It doesn't mean open and actively using the credit card and then paying it in full every month. That is a myth. To build a credit history, you have to use the credit. Because the algorithm, the credit scoring system can't gain any traction if you're not carrying a balance and making payments on it. How do they know? The fact that you paid off in full every month is not a good barometer of credit worthiness. Okay. Final thing I'm going to say about personal credit is this. Stop worrying about inquiries. Oh my God. During the pandemic, when we consulted with thousands of small business owners, 500 clients hired us to manage their process. And how many times, even when I was a mortgage banker, how many times people say, "Oh, are you going to run my credit?" "Yeah, we're going to run your credit." "Is the SBA going to run?" "Yeah, they're going to run your credit." You know why? Because you're asking somebody to lend you money. They've got to look at your credit history. It's going to be soft or hard. How do you even know what the difference is between a soft and a hard hit? I mean, when I remember the first time a consumer told me that, asked me that question years ago, I didn't even know what the hell that meant. This is how much the credit industry has bombarded you with crap that you don't need to know. But by the way, that same credit industry, when you have a problem, there's a mistake on your credit report, or you've paid off an account, and especially a delinquent account, and it doesn't show as paid off, they are the worst at following federal regulations, which if you want to know what those are, go to ftc.gov and learn your rights as a consumer with credit bureaus. So don't worry about credit inquiries. If you want to borrow money, the lender has to look at your credit report, whether it's for a credit card or a car loan or a mortgage or whatever it is. They're going to run your credit. I did a video recently, and Tanya had a couple of questions about her COVID EIDL, notably if she has late payments, if she defaults on the loan, if it goes into collections, how does that impact her personal credit? So we'd encourage you to locate that video. It's in our new playlist that Linda Ray has put together, the COVIDiversary playlist, which you can find here on the channel. And in that video, I discuss the possible impacts on your personal credit score, personal credit report, personal credit history of a default on a COVID pandemic loan. And I also discuss other negative consequences if you default on a COVID loan.